Hello, my name is Molly Janine, and I am so happy that you are spending some of your day today, wherever you're tuning in from, with us. We're so delighted to be partnering with GMAT Club today to bring you a little bit of advice on how to navigate kind of international funding options as you approach your MBA. And so to introduce myself, my name is Molly, as I said. I work for Prodigy Finance. We are a company that's been around for 10 years, and we funded over 7,000 international students studying postgraduate degrees. We'll talk about us in a little bit more later in the presentation. We're really excited to hear and keep this presentation relevant. So please do let us know what questions you have. We'll be kind of looking at those throughout and making sure that we are addressing the most relevant and broad sweeping of those questions. To tell you a bit about myself, I am a person who is hugely passionate about international education. I myself have studied abroad in Ireland. I'm originally from the US, and I've traveled vastly. So it's something near and dear to my heart that education should be accessible to all. And so I'm excited to dive into this today and hear about kind of what questions we can help uncover as you explore your best fit for your postgraduate studies. So with that, I'm going to dive into the presentation here. I'll start by sharing my screen. So see you until we take questions later. Thanks. Today, we're going to look at the 6 steps to understanding international student loans. As many have said, but in this case, we'll cite Benjamin Franklin, an investment in education pays the best interest. But the problem is that investment piece, right? So, how do we tackle that? We're going to explore that today. And that's certainly what my company, Prodigy Finance, has done as a pioneer in the community-based student funding. So first and foremost, we're not a bank. Who are we? We have funded students from 150 countries. We've originated over 350 million in loans. And we are a company that actually is now at 140 employees across 3 major offices, with also other employees scattered throughout the globe in places like London, Cape Town, New York, Mumbai, Madrid. So we're a growing company. We're an international company that represents global talent. We work with 100 plus top-ranked universities. So this is just a spattering of some of the schools that we work with. But if you'd like a more comprehensive list, please do visit our website where you'll be able to see the full list. Roughly, we support the top 100 Financial Times ranked universities based on the MBA. In addition, we do support other business programs in those schools. And as of recently, we've started supporting other MS degrees, such as engineering programs, computer science, and then branching out into law and policy as well. We're going to look at how can you pay for your master's degree as an international student? What is a cosigner and collateral, and do you need one? What does that application process look like? What is interest rate, and how is it related to APR? So taking apart some of those terrible acronyms that are thrown around all too common without definitions. We're also going to look at how do funds disperse, and what is the repayment process. So step 1, financing your degree. 3 basic ways to finance. First and foremost, scholarships. Who doesn't love free money, right? So it's money that you've worked hard with your test scores, with your application to certain schools. So certainly a school's financial aid page will give you a good exposure to that. Also working with the financial aid team at whatever schools you're exploring to make sure that you are applying for any extra scholarships that might be available. There's also home government options in many countries, and so I would encourage you to look there. There's philanthropy scholarships, so for specific causes. So maybe it's tied to the area you're from or an affiliation that you might have. And last and least, certainly not least, we at Prodigy Finance also have a scholarship that you would be eligible for if you did go ahead and make an application and get funding with us. Once you've exhausted all your scholarship options, then you also want to look at, okay, how do I meet the rest of that cost of attendance, or COA? to make this option real for me. So looking at yourself, your own personal savings, your budget, as well as those that you might have in your extended network and family. Once you've done that, if there is a remaining need, then education loans are the fit for you. We believe that getting in should be the hard part. You've worked hard, your family has supported you in many cases to get you here and invested a lot in it. So let's remove the funding from this equation and provide another option if you do have an unmet need after looking at scholarships and family funding. So the language of loans. First, we want to look at what is a cosigner, what is collateral. So a cosigner is if you are seeking a loan from the country that you are going to study in. So let's say you're going to study at Booth, University of Chicago Booth. You would be looking for a cosigner to allow you to get a loan to attend Booth. So a cosigner would have to be somebody who has a credit history and is established in the US. In most cases, it will be a US citizen. And what a cosigner does is they cosign exactly that for your debt. So they take on that debt alongside you so that if you're having trouble repaying down the line, or if you're unable to pay, that person would be responsible for it. So that's what a cosigner means. Obviously, as an international student, this can be a struggle. And we've seen that most of our team, having studied abroad ourselves, understand this very deeply. That's a hard thing to ask somebody who isn't very close to you. So that can be a barrier. However, if you do have somebody, you might want to explore that option. So if you're not able to get a cosigner and you're not looking in the country that you're planning to study in, then perhaps looking more locally. So if you're looking at domestic lenders, these are traditionally domestic banks in your home country, then what they will usually request is collateral from your family. So collateral from you or from your family that is going to heavily kind of balance out or actually overbalance the amount that you're requesting to take. And why do they do that? Because naturally you're leaving that country, you're going somewhere else, and they want a way to know how to collect on that debt if they need to, or if you're struggling on payments. So that's a collateralized loan. Prodigy Finance is an alternative, and that's why we're a bit of a pioneer in the space. We're started by international students for international students, and we were born out of this idea that a lot of students do not have access to something without a cosigner or without a collateral. Whether they don't have access to it or they don't want to put that debt, their debt, on another individual, this gives them an option to actually fund themselves. As a quick quote put up from our students, the key here is for many students, they're seeking a way to take on that investment themselves rather than outsource it to somebody else. So how do we do what we do? We are a borderless credit model that's driven by data. At its core, we are a data analytics algorithm that says we know that we know by supporting the top universities globally that we're partnering with the best. We know that you as students who have already been vetted by and have received letters of admissions by these universities are already successful in your career and will go on to have a very high return on investment on your tuition and be able to comfortably carry your debt and pay it off early in many cases. So because of that, we say goodbye traditional lending terms. We're rewriting what it means to be a lender. We instead are kind of shaking up that banking sector, and we're saying, listen, you do not need a cosigner, you do not need a collateral, and actually, if you can pay it back early, you're very welcome to. How we do this is we go directly to investors. Often these are people who have been in your shoes before. They are folks that are going to the same programs that you might be applying to. They are folks that maybe had issues funding themselves or maybe didn't, but had a classmate who did. So they invest directly in your future. Schools themselves as well are investors in some cases, and they are helping us vet you by looking at your career trajectory, your test scores, all those good things that they do in the admissions process to ultimately admit the best and the brightest. We're then able to tell investors and give them that assurance that we are finding the best and the brightest, and we're funding the best and the brightest. In our best scenario, our students actually come into the Prodigy community, become community members, pay off their loan on time or early, which over 99% of the Prodigy portfolio to date has done. And in some cases, actually go on to comfortably become our next generation of investors. So if you go on and take a Prodigy Finance loan, or even if you don't, we hope you'll consider that to help this continue on for many generations. We're pretty excited about it. Okay, so if you're considering this still, the application, how do you actually do this? What happens next? So our online application is just that. Our entire process is online. Another thing that makes us quite different. And as a fintech company, we're very proud of that. That will provide you an easy online application in 30 minutes. It is free, and it will allow you to receive provisional offers, in many cases, within seconds of actually pressing submit. Our 30-minute application is going to ask for very basic information, such as the program you're applying to. We're going to ask you to meet the budget for that cost of attendance. We're going to understand that cost of attendance by working directly with the school. So your tuition plus the cost that it might be to attend that school. So for example, if you're attending University of Michigan Ross, we're going to say, okay, the cost of living in Ann Arbor, the university town there, the university has set it. We're going to add that to the cost of tuition. We're going to ask you how you're making up that budget. In part, it could be up to 80% cost of attendance for that you can ask for with your Prodigy loan. If you're going to school in Europe, it will be up to cost of tuition as opposed to attendance in many cases. So there's some variability there, but that gives you an idea. You'll fill in basics about your test scores, what university, your basic financial picture, and you'll press submit. No documents are needed. We'll be able to make you a provisional offer based on this, or at the maximum, if there's any questions on your application, this will come within 5 business days. You might say, what if I'm applying to a plethora of different schools? Good for you, you should be. In that case, that's great. We understand that financing is a part of that, and ultimately might be why you choose one school or another. So you're welcome to start multiple applications with us and get multiple different provisional offers potentially. That way you can say, okay, I understand my financial picture as saying yes or no to this university or that. Phase 2, you would be providing your verification documents. So we would ask for about 6 documents that would say things like your proof of passport, your proof of scholarship or savings, if that's contributing to your studies. We would ask for a credit report from your home country. If you do not have any credit, or this is your first time taking on a product, don't worry. Actually, you're like the vast majority of our portfolio and of our clients. So don't worry about that. We just need to know that you don't have any bad credit. After you provide these documents, we will verify this, and you will receive an electronic loan agreement letter. This you can review at your leisure, you can sign, and that would push you forward and be ready to ultimately, if you decide to go on, get your visa, say yes to that university, and be on your way for funds just to be dispersed, which is something we'll talk about in a moment. I want to pause here and just talk a minute about our credit model. How is our credit model, and what does it do? We often get questions on this. So it is a data analytics model. We're looking at data not only on what we have seen that you presented in your application, for example, your years of experience, your career trajectory to date, and your pre-study salary as some of them. We are also looking at the outcomes that we know of the program that you're coming to. So we exclusively work directly with the schools. So we also look at career outcomes, let's say for your MBA coming out of, let's say, UT Austin McCombs. We will look at the career outcomes of that program, and we will also build that into our calculation. So we're going to look at the amount of debt that you can comfortably carry. We're also going to look at a customized interest rate. And so that can range between 5.5 and 8.5% plus LIBOR. If you're studying in the US, it'll be US LIBOR. If you're studying elsewhere, it could be Euro LIBOR. The loan parameters will be a maximum loan of 80% cost of attendance if you are studying in the US. If you're studying elsewhere, it could be cost of tuition. And we are a conservative lender. What I mean by that is, what is nice about us is when you're looking at your options, you know that this is a data-driven decision and that we are making you an offer of a loan that we believe you can comfortably carry. And not only do we believe that, but we have data to back that up. And so that can rest assured that we're not over-indebting you. We're making sure that you're set up for success, not just in the program, but beyond. We're also doing that to our investors naturally. So it's a win-win in our books. Repayment options, there's no penalty for early repayments, and most of our portfolio will look at that as an option. You also have grace period, meaning you are not required to make any payments during your period of study or the 6 months following. So that will allow you to get settled. So understanding your rate and APR. So once you submit, you'll get a initial rate from us. You'll also get what's called an APR. So we'll kind of take that apart. What does that mean, and how does that allow you to compare products? Your rate will be between 5.5 but up to 8.5% based on your portfolio and your program over LIBOR. The rate is going to be unique to you and is customizable based on your portfolio. APR, as I mentioned, is what's going to allow you to compare products. Annual percentage rate is not the rate at which interest will accumulate on your loan. Rather, it is the effect of all financing costs over the life of your loan. And it is something that is actually regulated by a few government bodies, but it's standard in the UK and the US, which is why that we choose to disclose that APR to you. Keep in mind, though, if you are looking at other loan products, let's say in your home country, and your home country is not the US or the UK, please make sure that you are not you're comparing apples to apples. So you're looking at the right rate to compare those and making sure that you understand fully that APR is not the rate at which you accumulate interest, but rather that effect of all costs of financing, including, for example, the administrative fee, which is a one-time fee, calculated in. I understand this is kind of a difficult concept to understand. And so because of that, I have a slide to take us through a little bit further. This student was applied for a Prodigy loan, and on the loan terms, which can be 7, 10, or 15-year terms, they got a 7% fixed margin rate, fixed meaning that is not going to change over the life of their loan, and they got a 10-year term. They then had a US LIBOR rate, which was 1.16. So US LIBOR changes throughout the life of the loan, and US LIBOR actually changes every day. However, what we do to make sure that we don't go crazy and you don't go crazy measuring it every day is we take it quarterly. So we'll look at where LIBOR is quarterly, and we will calculate your interest at that stage at that US LIBOR. To give you an example, when we issue your offer, we'll take today's US LIBOR rate. So in this example, we have 1.6. So you have that fixed margin of 7 plus that 1.16. That's actually going to give you 8.16, and that's at the rate at which interest will accrue. That is the rate at which you'll actually see your outstanding loan balance getting interest on. So it's at 8.16. That is not your APR. That is the interest accrual rate. So if we look at the next, okay, what is your annualized interest? So in this example, it's 0.42 plus that upfront administrative fee that we actually lend to you as opposed to request it from you at that time. And so if you went through with us, it's usually 2.5% of the total amount that you're lending. So in this case, then the APR, which would be the 8.16, the interest accrual rate, plus the annualized interest, plus that administrative fee, actually comes out to 8.99. So your APR would be 8.99. The rate at which you're accruing interest is 8.16. Moving forward, so you've gotten through all this, you've understood your loan offer, you submitted a few applications, you decided ultimately, I can't wait, let's say, to go to Stanford, and I've signed my loan agreement, I got my loan confirmation letter. What happens next? How do I actually get my funds? So after you have ultimately secured and reached campus, we will work directly with the university, and we do this regularly. So we funded over 7,000 students at these top programs. We know the financial aid office quite well. We have personal relationships with them and relationship managers that help this go seamlessly. So we align our disbursements directly to your tuition due dates. So in most programs, you're going to have two. Let's say you're starting in the fall. There's often one in August and often one on or about December or January. We will disperse your funds directly to the financial aid office. They then take those funds, allocate them to any outstanding fees that you have, and if you're also borrowing for living expenses, they will forward those directly to your bank account. So it's a seamless transaction. Just to note quickly that if you are in a 2-year program, you will need to reapply for your second year. But don't worry, we make you a provisional offer in your first year application so that you can sit confidently knowing that you already have funds allocated for your name. On the repayment process, to highlight, there is a grace period throughout. After that grace period ends, you will be asked to make minimum and regular monthly payments until the full balance is paid off. Should you have any issues in ultimately meeting those minimum regular monthly payments, please just let us know. Communication is key. We're a company made for students by students. We understand things happen, whether it's family circumstances or career circumstances that have changed. We're happy to work with you. Please just let us know. Biggest tip here is that let's say that you can comfortably do it. Please increase your monthly minimum payments. It will or shorten the length of your term by settling your loan early. This will drastically save you over the life of the loan and is a great thing to do. Prodigy also is proud to be different because we are transparent, we're online, we're here. Folks like me are here to walk you through questions you have on your specific program. You are part of a community. So not only will you see us in the application process, you'll see us on campus. We'd love to buy you coffee. You'll see us sponsoring your club engagement and diversity on campus, meeting with the financial aid office and making sure everything works for you so you can focus on your studies. We're proud to offer no collateral, no cosigner, school relationships, help for career and career placement, early repayments, and at the core of it is community. So that's a little bit about us. I am so excited to flip back and ultimately kind of get back to questions that you might have. And with that, I would love to hear what kind of questions might be coming from the crowd. At this time, it looks like we've done either a great job or there's not too many questions, but one question that I frequently see is on that. Actually, we do have one coming through, and it is on that idea of that cost of attendance. Can 80% of cost of attendance be allocated for an international student? Or is that exclusively for domestic students? So actually, there's two things in there that I would love to address. Number one, absolutely. So 80% of cost of attendance is available and can be available to you as an international student studying at your program of choice. Number two, Prodigy Finance exclusively works and exclusively is built for international students who ultimately are studying outside their country of residence. So we actually do not support domestic students. The exception to that is students who are studying in the UK. We are a UK licensed company, and so because of that, we do lend domestically there. However, the vast majority of our product is actually for international students. So our minimum loan size is $15,000, and our maximum loan size would be 80% cost of attendance. Thanks for the questions. I've got a few great ones coming on here. Here's one. Do you have people who have to go back to their home country after their MBA because of visa issues? How do they pay back their loan, considering the income can change drastically? Good question. So absolutely, we understand that it's a borderless world and that opportunities can come up. And maybe it's not the students referencing visa issues, but maybe it's not a visa issue. Maybe it's preference. Maybe it's family conditions. Who knows? Maybe it's a great opportunity that happens to be in your home country or halfway across the world in the other direction. We never want to restrict where a student goes and what potential you can explore. So with that, we certainly understand that and can build in flexibility for that. As a responsible lender, the amount that we're actually lending you is based on kind of controlling for some of those variables at the origin. And so that's something you can rest assured with. And again, I want to highlight, if you were ever finding yourself in that situation, communication is key. So just let us know. We can always talk about, okay, let's restructure your payments if that's needed, for example. Our aim is always going to be keeping you on track for once monthly payments, however, if possible. How important is credit score? Great question. So credit score is something that we need to check out as a lender, naturally to protect our investors and to protect you as well from over-indebting. However, all we're looking for is that you do not have a poor credit history. And so what that means is we don't mind if you have a credit history or if you don't have a credit history. We just need to see that you haven't walked out on other debt products. So long as you don't have a history of, let's say, opening credit cards and not paying them, or taking out loans or mortgages and not paying them, then you're fine. Most of our borrowers will not have a credit score. Question here on credit reports for Indian students. So CIBIL, C-I-B-I-L, is the organization that most of our borrowers coming from there will use to obtain their credit history. If you're coming from a different country, please just visit our website. We actually have references for all of the countries that we have seen to date. And so you can find out a reference for you. Do you have any reduction for early repayment? So I think that means, I'm interpreting that as a reduction, meaning I guess less on your loan. And the answer to that is yes. So ultimately, your term is going to be calculated. Let's say you're that student that got a 10-year term. If you pay that back in 7.5, for example, you're paying drastically less over the life of your loan, drastically less. And so thousands and thousands that you are saving. So in that way, absolutely, there is a drastic savings to repay your loan and to settle that as soon as you're comfortably able to do. Lots of questions coming in. I very much thank you for them. I want to be conscious of time, but we've got plenty of time to knock out a few more. So thank you, and please keep them coming. Let's see. The loan can cover up to 80% of all the tuition costs, or is it that the 80% of the balance after my savings? Very good question. So the cost of attendance, to pause there, we set with the university, so that's tuition plus cost of living. We're able to cover 80% of that. So let's go with round numbers. If your tuition for 1 year was 100,000 USD, we could cover up to 80,000 USD. The 20,000 USD to meet that cost of attendance, you would need to come up with non-debt funds in that example. That could be something like savings, scholarship, or sponsorship. Ultimately, anything that does not add to your debt burden. So to be clear, we're able to cover a maximum of up to 80%, depending on your profile, of cost of attendance against what the school sets. So that's not student specific. Great, we have some very good questions. I have a few questions here coming in on specific credit issues. So students that are exploring, okay, maybe they've had a little bit of a bump here or there in their banking history. Please, my advice to you is apply anyway. So in vast majority of cases, if it's small issues like the ones that I'm seeing students reference here, it's not going to impact your decision. What we want to see is that you haven't taken out, let's say, a $10,000 mortgage that was actually worth a lot more than that and walked out on it. That's the kind of thing we want to see. We want to see that we want to make sure that you don't have a pattern of walking out on debt. That's really what we're looking at. So long as you don't have that, you have no reason to worry. And even if you're considering and you're questioning, please consider applying. It's free, it's online, you'll get a decision right away. And ultimately, it can be one less thing that you're trying to guess that you know instead. Okay, so I've got a question here on loan payment. When does it actually start? Is this after the program ends or since when the loan was dispersed? Good question. So I want to take that two ways. One, your loan will start getting interest from the time that it was dispersed in your name. So that makes sense, right? So the day that we draw down those funds to pay your tuition for your first semester is the day that you will see some interest accumulating on only that portion we took down for your first semester, let's say. Second semester, we'll draw down more in your name, and you'll start seeing interest accumulate then on that second semester amount as well. However, repayments are not required the entire time you are studying. So let's say you're in a 2-year MBA program. You will not be, that starts in fall and ends in May. You will not be required to make any payments for those 2 years of your program. You'll, let's say, graduate in May of, let's say, I guess it would be 2020, potentially for some of you, 2019 maybe for others, but 2020. From May of 2020, you'll have a 6 months grace period where you're not required to make any payments unless you're comfortably able to. And then after that, you will start making monthly payments. If you're able to make payments, let's say you land a great job, and I hope you do, great signing bonus, and you want to get rid of some of that debt, you're very welcome to do that at any point throughout the life of your loan, including while you're studying or while you're entering, or rather when you're in that grace period. Question here, do you have representatives in the US, Canada, and India? So yes to the US and to India. We have a regional team that actually covers many of our major countries, and India is one of them. We do have an office in the US, actually. Greetings from the US office. I'm in New York right now. We do not have an office in Canada. However, our North America team, my team, does regularly visit the universities up there and visit the students and borrowers up there. In addition, we're headquartered in London with a bulk of operations in Cape Town, South Africa. We are a South African kind of origin company, with our founder being from South Africa and ultimately studying at INSEAD. Question here. What if I've never taken out a loan in my life? Is this a problem? Absolutely not. Great job. It's wonderful if you've made it to this point without taking out a loan. That's a great thing for your personal financing, and it's a great thing too for your profile. So long as you haven't taken out a loan and walked out of it, that's fine. If you have taken out a loan and you've regularly been making payments, that's great too. Ultimately, I just want to highlight, we just don't want to see any negative marks. These questions are fantastic, hitting on those that I think can address kind of the themes I'm seeing. We certainly do. So some questions on who and where we finance. We finance to students from over 120 plus and counting different countries, so long as they're studying outside their country of origin. You can see kind of a list of who we support and where they have come from, also what universities they're going to. They do go to schools in Canada, was a specific question here. They also go to schools all across. So we have students studying in across many different continents. For the MBA programs, we're staying within the top 100 universities based on the MBA Financial Times. So that can kind of give you an idea of where the bulk of our MBA students are. Great, thank you. Just scanning some questions here. I think in the essence of time, we'll take maybe one more question or maybe two, but I'm just going to make sure we're getting those that can address the bulk of the concerns here. Great, okay. Why is the amount dispersed in 2 installments? So that's a good question. So I use that idea of 2 installments because the vast majority of universities who are on semesters have 2 tuition payments a year. So the reason we would do that is so that you are only seeing interest on the amount that is dispersed in your name when it is dispersed. So that way you can kind of rest assured that if you are, let's say, studying at NYU, that you're only seeing your interest, and you're only seeing your interest on your living expenses as well as your costs or your tuition on the amount for example, your fall semester. That second semester then comes up and you need to make that other payment. Will seamlessly align to NYU's tuition payments in this example, so that when your winter semester financing is due, we can settle that for you. Again, it's one less thing you have to worry about. We know that there's some banks that directly disperse to students. Keep in mind that that means that ultimately you're getting interest from that moment they disperse, which is often before you even start. That can add up to a lot of money. In addition, then it puts that burden on you to remember and to manage how and when to pay the university, how and when to budget the amount of living expenses you have. So for us, we found that it works very well to do that. Okay, one other question here. So let's see, one other question asking about who and why we support the universities we do. So right now, we are supporting exclusively those business programs. We're hopeful to expand, and we likely will in the next year. But right now, if you're not attending a university or don't have that letter of admit from a university we support at this time, right now, we do not have funding available. That being said, we hope to scale and to ultimately grow our data model to build that offering out. So please stay tuned. With that, I want to say it's been such a pleasure to actually see such an engaged crowd today. My name's Molly again. Thank you for sharing some of your day. Thank you for hearing about us at Prodigy Finance. We really believe that access should be core to follow your abilities and your demonstrated talents to get into the top programs. And so thanks for hearing us out today. And thank you to GMAT Club for helping us put this on today. It's been a pleasure. We look forward to hearing from you. I hope you'll consider making an application. It will take you just 30 minutes and hopefully open up an option for you. Best of luck in your applications, and looking forward to seeing you. And who knows, maybe I'll see you on a campus sometime in the future. Thank you very much. Take care.